Piper with the weekend video clip, and it's Saturday the 5th of May, and this is a chart which I think is the most important this time, being the chart of the Dow and this triangle. Now there are two ways of looking at this. My mouse is playing annoying. I think it's probably an A wave, not part of the triangle. ABC. And so I think the triangle actually starts from there and from here. Okay. Now there is some evidence to support that view, which is basically if you go start from here, then we have seen breakouts and they failed. So that's pretty negative anyway. But also we've got these waves A, B, C, B, ABC, C, then ABC, D. So on that basis we have one more rally. Now that started to come in last week, and this rally, if my count is correct, should fail around 24300, 24500, that kind of thing. So a sell-off from here could be the precursor to another leg down, and the leg down here was I think around 3,800 points or thereabouts. So a 3,800 decline starting from here takes down about 20,400, which would be an excellent trade, especially for 66.33. It's what I'm gearing up for at the moment, is putting in orders at all the 66 level on the way down for a possible sort of 4,000 point move. That would be a bumper trade, but of course it won't all be straight line. There will be some bounces in the way, which will mean resetting the positions. That's my preferred count. We have the Dow remains particularly weak. It's failing to do very much, but the retest of this line here is part of the process, and of course it could break through, which obviously. When trading, it's not a question of, it's not static. It's a question of being fluid and moving with what's actually happening. You know, I'm not going to trade something's not happening. I'm trading what is happening at that very moment in time. So the idea of making calls, I suppose, to an extent, is a bit of a misnomer. It's not making a call. It's setting up a roadmap, and then along the way you check the scenery, check what's happening, check the road signs, and amend accordingly. That's fairly obvious, I guess, really. Well, the other point of note in this chart is the 200-day moving average, which is this line here, which keeps holding the market up. We've seen quite a few spikes below it now. Latest one on Thursday, a small spike here. So clearly part of this big fall will be that we're breaking, and that may well be the sell signal to set the whole thing off, or at least accelerate. And let's look at the shorter term chart. Right, this is a 30-minute chart. The previous chart was a daily chart. So let's have a look. This is the wave D low, A, B, C. I mean, it could form a 5, of course, but the actual trend line is a little bit higher up around here. And we'll have to wait and see how that develops, but potentially highly negative. Right, looking at the DAX, we've got the peak here. Wave 1, 2, 1, 2, 3, 4, 5, third wave, regular A, B, C, fourth wave, and then this move here, which I'm counting as the fifth wave in that sequence. This is a bit messy. The count isn't very clear. It does start with an ABC, so it's just as corrective, although it has developed a possible 5-wave pattern with this correction here as well. So again, a few question marks, but right on the 61.8% retracement, the fib level, around 12,880, 13,000, well, 12,900. So again, you know, a reversal from that level is certainly on the cards, certainly possible, and that would clarify the count, which is looking a little bit strange, and take us down perhaps from there. It is May now, of course, and people do say sell in May and go away. Alright, gold remains a bit messy from the low here. That's impulsive. We then have an A, B, C, A wave, A, B, A, B, C, C wave for B, then a 1, 2, 3, possible fall, which may not be over yet, maybe another C wave. Then one final decline will give us a complete ABC with trendline resistance support around 1280, 1300. So I'm still looking for a key low here and a substantial rally. I just don't think the low's in at this point. At least there's certainly a case for one more pullback. All right, finally Bitcoin is looking pretty good now. We had the low down here, a retest of 6,000 around 6.5. So we got wave 1, wave 2, then a 1, 2, 3, 4, and 5 to make wave 3. Then a bit of a triangle for wave 4. And then this is the fifth wave coming in. So I mean 10,000 has always been a key resistance level. There's a case here we're going to see a pullback from around the 10,000 level. And if that's corrective, that would be perfect. That would be a great buying opportunity. I think this market is building a head of steam though, so it could just take off at some point. So if you want to buy more, then putting some money in now may not be a bad idea. That's not a recommendation. It really depends on your own investment criteria, etc., etc. I'm fully positioned. I will add when I see a good buying opportunity, but via my SIP probably, by the tracker funds, maybe some spread betting as well. Depends how I feel about the market. But right now we've got 5 waves up. We're at 10,000, which is a most likely area where we could see some hesitation. So a pullback to around 8,000 or thereabouts, or perhaps down to the 8.6 support here, would be ideal in a corrective format to give some confirmation that is we have seen the low and that we are off to the moon once again. Anyway, that's all for today. Hope you found that interesting, useful. Back to the report on Tuesday morning for subscribers. Have a great weekend. Thanks for listening, and bye.